my passion truly is why I'm seeing this Brivo transaction exciting for us is because, as you heard Steve over the last 20, 30 minutes, to sum it up, he really has created an operating system for the built environment.
Welcome to the Spac Alpha web series. My name is Dan Dombroski, and today my guests are the co-founding CEO of Brivo, Steve Van Til, and the CEO of Crown PropTech acquisition, Ricky Chera. The two are combining in a deal with an enterprise value of over $800 million. We discuss the evolution of web services and Brivo's contribution going back to the genesis of cloud-based access control solutions that are now part of our everyday lives. We also talk about how user needs have changed over the past 2 years as office spaces and family lifestyles have been redefined. Now, whether you're a seasoned vet in the space or just starting out, learning about Brivo for the first time, Steve has a way of breaking down technical concepts that makes learning about his company's journey easy to absorb. And with that, please enjoy my conversation with Steve and Ricky. Now, Steve, I'd imagine over the past over 2 decades, Brivo is really in your blood, but is there anything outside of the company that you're truly passionate about?
So I would say that my passions outside the company have changed over the 20 years. It's a long period of time. So I would probably chalk up long distance cycling as one that's been fairly persistent over those years.
Does that help you with managing stress, or how did that come about?
It was long evolution. I've really been riding for 30, 40 years now, more intensely for a while, and just kind of built up, I think, as I found more places to ride where I live now, a lot of country roads. It's a great place to get out early in the morning and just be entirely by yourself with your thoughts. And of course, that's when a lot of insights happen in an unforced situation that you can't do if you're actually trying.
Right. So how often are you going cycling?
So the average, I think, is a little bit easier to describe. At the peak a couple of years ago, I was averaging about 100 miles a week, so 5,000 a year, which is not anywhere near what I'd say Olympic level, but I think pretty good for an amateur.
It's about 49.50 more than I've got, so ahead of me here. Oh, Ricky, I'd like to know, are there really any key moments that defined your career that you can look back on?
I would say that it definitely was a series of cumulative build-up moments, but I think transitioning from being in the retail business, multi-generational family retail business, to realizing how technology not only changes other businesses, but more specifically how it changed the real estate world, where as a retailer, we were tenants in buildings all over the Northeast of the United States. I think the pivotal moments for us were just seeing how technology was able to bring a closer level set to e-com companies. So there was a huge disparity between brick and mortar retailers and e-com companies. And unless you fully shifted to an e-com company, you still had this brick and mortar presence with nearly 1,000 employees and dozens of locations. And then seeing technology being able to sort of level that playing field and bring things closer to parity and closer to how we were able to get the gross margins higher. So I think those pivotal moments were sort of accumulation of how technology kept getting introduced, and then eventually a full shift to the real estate business, and then another further shift into getting deeper into technology itself.
Now, as a first-time SPAC sponsor, is there anything that you can identify that best prepared you to be the right partner for Brivo? And then more broadly, could you speak towards the expertise of your team that's supporting you?
Absolutely. So the preparations for something like Brivo were sort of simple. Again, looking back at my past business life in retail, there were vulnerabilities all over the place. And mitigating for those vulnerabilities and being able to solve for those was always the challenge for us. But our clear goal every single day when we went to work was do business with the best and be the best to your customers. And that's exactly what Brivo stood for us. Brivo's strategy was right on. We understood that they were a market leader, and we also, talking to some of their customers, understood that they were the best partner for those customers. So the preparation was my old business life, and then seeing how Brivo acted similarly in the business world. And that for us was really quite refreshing, to be honest with you, because many companies that we were seeking to merge with didn't embody those principles. And when I met Steve and the team, it really cleared up a lot of noise for us, and showed that that his team, Steve and his team, were able to really execute on that strategy. And with respect to our team, so my two co-sponsors is Rashik Zarif, who's a former future of mobility leader at Deloitte. And prior to that, he spent close to 15 years at Mercedes-Benz's Daimler units, mainly on the East Coast and then West Coast of the United States. And he had a tremendous amount of vision for how technology disrupted older line businesses. So in the case of Brivo, it was real estate, but for him, it was the automotive business. And we shared that same passion, meeting years and years ago at conferences like South by Southwest and the CES show and the real estate shows, ICSC, really showed that we had this shared vision. And my second co-sponsor is Dr. Pius Springer, who was a former Deutsche Bank trading in the London desk. And he understood how the public equities markets really worked. And he understood that the Spac vehicle was really created for perfect synergies like our sponsorship team and a matured company that is ready to evolve into its next phase of its life, like Brivo. So he really introduced me to the Spac world.
And without naming names or anything, are there other companies that you were looking at that had a lot, but just it didn't hit on every single point that made Brivo really stand out?
Absolutely. That's exactly the cycle and process that we went through. So there were dozens, and then culled down to a small handful of 5 or 6 that really started to pique our attention. But none of them really checked the boxes like Brivo did for us.
Sure. Do you mind going into a little bit more about what that due diligence process looked like?
Sure. First and foremost is we always had a tremendous amount of stability and reliability on accounting. So accounting and making sure that what is being represented is actually accurate. Second part is, like I mentioned earlier, customer feedback. For us, customers in many cases have no reason to tell you, not exactly what they feel about the companies they do business with. So for us, the customer outreach and the customer interviews were really important. And then third is, and this is where my experience really comes in a lot, is how much value does the product bring or the software bring to the customer? And sometimes the ROI is very tangible, and sometimes it's more of a user experience that you can add to the value of the property or the company that in Brivo's case is being installed in, and sometimes it's a little bit less tangible and more long-term. And for us, that 3-step process was a real important funnel for us, amongst other due diligence pieces, but those were 3 mainstays for us.
I appreciate you walking me through that kind of that step-by-step process for you. Steve, I'd like to jump back over to you. Could you walk me through a difficult time for Brivo in your long history, and what led up to it, and what was the result, or what came out of it?
I would say this is kind of an extended period. The most difficult time was really the early years in general. And I could say, the first 5 or 6 years. And the reason that they were challenging is that we were quite a bit ahead of the rest of the market, both in terms of the immediate distribution channels we had, which were the security industry integrators, and then the end user markets, which was really every kind of corporation and business in the US, but then also specifically real estate owners. And I think Ricky will agree with me that the real estate community in general has not been tech forward. I think they're becoming much more so today, thanks to the level of investment that's been happening in prop tech. But they weren't very tech forward. The security integrator channel wasn't very tech forward. So we spent perhaps the first 10 years of the company really proselytizing cloud technology, the benefits of having centralized security, getting people comfortable with the idea of not having a server on premise. There's a certain emotional satisfaction that people feel if they can actually touch their server. There were, if you think back to the early cloud days, lots of concerns about cyber in general. And there were obviously some spectacular failures in those early days. And I think it took a while for people's understanding to mature to the point where they said, hey, not all cloud companies are created equal any more than all cars are created equal. There are really good ones and there are really bad ones. And the art of making a good business decision is to know how to separate the two of those. So I think that really the first decade of the business was one prolonged exercise in educating the market and simultaneously building up our solution. And I think that the daybreak really happened around the beginning of the last decade when people had gotten through a lot of those things in general. There were some other great examples of cloud companies in enterprise application space, and the whole concept became normalized. And so that was the beginning of what I'll call the second era or the second decade for us. And that was a much more open, accepting customer base. And here we are today with everybody firmly understanding the value of connecting portfolios in the abstract to cloud services and mobile services and information services, and then also specifically connecting IoT devices inside of smart buildings so that you have real-time information about what's going on with the building, with the occupants, with really everything there.
So you touched on a lot of good points there that I think it makes sense or would help viewers to gain context just because of longevity. And you were really there and helped defining the space. And you really predated a lot of these web services that we've become accustomed to in our everyday lives. Could you walk me through significant milestones within the space and then how that aligned with Brivo's growth?
Yeah, I think if you're looking at the technology, when we started, the dominant model for doing cloud services was being inside of a co-location facility. So you got access to the internet, you got power, you got air conditioning and all those things, but you were still building your own, you were still racking your own. So there was a real lack of standardization back then. And the component technologies, both at the hardware level and at the software level, were very early, very immature. And so finding the skill sets, finding the people that knew how to build these systems was a really hard thing to do back then. Consultants who knew how to do this stuff were doing really well. Since then, really kind of dividing now into the modern area where you've got Amazon Web Services, you've got the Google Cloud Platform, you've got Azure. All of these things have taken a lot of the plumbing out of the equation for folks. And in the wake of making those platforms available, there's been an explosion of what I'll call ancillary services around that. And so the amount of leverage that we can get as a cloud company today, as a software development company today, is much greater than it was back then. And I think the final chapter of that really has been what many people call the API economy. So not only did the platforms that we're using to create these services get much better and much more powerful and give us much more leverage, but then customers started realizing that they could give their own businesses a lot more leverage if they took advantages of the APIs that we'd created and then built those into other workflows that are already happening inside of their companies. And of course, that's the real power of any of these automation solutions, is being able to connect these things behind the scenes so that your company, your customers are benefiting from these integrations, even though they're fairly invisible. That really is the goal.
And can you talk more about these ancillary services? Like what surprised you the most about its growth or trajectory?
So I think the ancillary services that have become the most meaningful in the last 3 or 4 years are all of the data analytics and AI and data services platforms that are out there. And so that's made it possible to be able to build, for example, neural network solutions or analytic solutions without necessarily having a deep bench in data science inside your company. Now we have a pretty good group for a company our size. We've got 5 people that are data scientists and doing this sort of thing. But the leverage that they get from having these tools available on these platforms means that they can spend their time thinking and doing math instead of rewriting code that perhaps exists somewhere else, and instead take advantage of services that are available from any of the platforms that I mentioned earlier.
And what has this meant for new partnerships or undiscovered opportunities that you didn't initially account for?
So one of the types of partnerships that we're seeing is companies who want to consume just data from us. They don't use the product, but they do want to use the data that's generated in the aggregate from this. And the pandemic has really underscored the value of this information because people want to understand how the economy is doing. They want to understand how specific sectors are doing. They want to understand how specific geographies are doing. And the fact that we're in 72,000 properties watching, so to speak, the activity of about 20 million users means that we know a great deal about economic activity in the US and another 41 countries around the world. And so being able to look at the level of activity in commercial venues before, during, and now in the recovery period is just one example of partnerships that have emerged in a sense because of the pandemic, but I think they're going to be durable because the real estate world has become understandably focused on what's going to happen in the new normal. Are there going to be permanent changes of usage patterns? Are there going to be parts of my portfolio that no longer have the same value? What does occupancy look like? So the partnerships around higher level data output from the kinds of activities that we're doing with our customers are, I think, one of the most exciting eras. And it's another example of both the security integration industry that we go to market with and the property ownership group, making it into, we're well into the 21st century at this point, but making it into this decade in terms of being able to leverage the latest technologies and data services.
So I think that lays a fantastic groundwork for the background for both Brivo and how the space came to be. But I would like to dive into painting a picture of what Brivo looks like in terms of what its product offering looks like in the different markets, and really just short of, I guess, pulling up an Excel sheet. What do the revenue streams look like and the margin contributions for that?
So the product itself, we could have talked about this a little bit earlier. So the core product that we started out with has been what most people would call commercial cloud-based access control. So if we decompose that, the commercial part's pretty easy to understand. What that says is that we're in commercial properties. We don't do any single family residential to speak of, so we're not a smart home solution, but we do multifamily dwellings. And so they're residential, but they're also commercial in many respects. So they're kind of at the boundary there. So the 3 markets that we serve in that broad context are large enterprises, general commercial properties of all kinds, literally everything from agriculture to zoos, and then larger multifamily businesses. So those are the places where we're active. The second thing is that from a product perspective, we really have a full stack, meaning that we have everything from IoT devices that we make through contract manufacturing relationships and get installed inside of buildings. That's what provides connectivity back to the cloud solutions. We do all of our own cloud software development. So all the applications that we write are unique to our customers, our business application. And then we also do all of our own mobile technologies. And the services that we provide, many people don't recognize them immediately as something that they've used before. But I think it's safe to say that anybody who's been or had a job inside of a commercial office building or lived in an apartment building has used this foundational access control capability. So if you've ever walked up to a door and held up a card or a fob to a little black electronic box next to the door, then you have used commercial access control technology. But what's behind that little black box is where all the difference is. And that's where the cloud services come in, the mobile connectivity, the APIs. So that little thing that's next to the door when you're walking into your office building or an elevator or an individual suite, there is a lot going on behind there. And that's the part that we do. That's where we add value.
So that breaks down what your product segments look like, but can you lay the groundwork for where you are geographically?
Sure. We started here in North America. That's where 90+% of our business is so far. We actually have customers, meaning both end users and channel partners in 41 other countries around the world. The bulk of those, the biggest market that we're in outside the US is in Europe. We actually have a subsidiary in the Netherlands that we created in 2018 to serve that market better. And then Latin America is another growth market for us. That's not to say we're not interested in the rest of the world, but those are the places where we're planning to drive more sales, more technology, more relationships, partnerships, and so forth over the next several years. So having said that, 90+% of the revenue is here in North America. The biggest single segment of that is in this large bucket that we call general commercial. And that's everything from doctor's offices to retail to manufacturing, transportation, education, healthcare. It's a very large bucket, but there's a lot of diversity there. And the applications, the way that people use the technology is very similar. So if you imagine somebody having access control in a doctor's office, that's kind of the same as a lawyer's office, which is not that different from a dry cleaner's, for example. So we're still opening doors, we're still doing identity management, all those kinds of things. So the bulk of the revenue, the single largest chunk would be from that very large bucket, which is partly an effect of the way that we've divided things up. The next significant segment for us, which is also the one that's growing the most rapidly, is the enterprise market. And the way that we define that is any company that's got 1,000 or more employees and more than one location. And the reason we divide them out that way is that they tend to cluster around the kinds of features that they need, the kind of expectations they have for cyber and things like that. So that's a segment that's in the low teens for us right now, but it's growing the most rapidly. And then the third piece is multifamily, which is around 8% of our revenue today, both in the North America segment and globally. And so that's how things break down. You had asked earlier about revenue and product margin and the like, so we can kind of walk through there. So the forecast that we had for this past year was 71.6 million. That's what's in the investor deck that we've got out there. We announced earlier this year that we were going to be north of that by $1 million or so. We're following up on that, and by the time you're all listening to this, you'll see that we beat it by nearly $2 million. So the year came out better than expected, with over 25% growth versus the prior year. The gross margins for the company are divided out into two pieces. One is gross margins on the hardware devices we sell, which represent about 55 to 60% of the revenue today. Those gross margins on a blended basis across all of the hardware products we sell are in the 50s, which is unusual for this business, where a lot of people are discounting or nearly giving away hardware devices in order to establish SaaS relationships for them. We haven't found it necessary to do that. There isn't that kind of margin pressure in the markets that we're in vis-a-vis competitors, and so we enjoy good hardware margins there. The margins on SaaS are considerably higher. They're in the 70s on a blended basis. We have both the native subscription services that we provide, that core access control, and some of the ancillary services there. And then there's also a blend of some third-party services that surface inside of our application, like video, for example. So our blended rate there is north of 70%. So that's the revenue composition. What else would you like to know?
Well, I guess that's a good transition into what are you projecting going forward?
So we're at a pivotal point. One of the background bits of information that I need to provide for you in order to understand the forward projections is that for the last 6 years or so, the way that we've operated the business has been on a self-financed basis. Essentially, think of keeping the same amount of dollars in the bank account at all times and doing as much growth as you can within that constraint. So in those 6 years, we've gone from 18 million to 72.5 plus million with that strategy. The difference between that period of time and the future is that we're now, along with Crown, applying growth capital to this equation at a level that we never have before. So taking the same techniques that we've been able to use for growing not only organically, but on a self-finance basis, and then applying those at a larger scale with the additional financing that's available. So this past year, for example, 2021 was more than 25% growth over 2020, again, with the self-finance strategy. As we look forward, CAGR for the next 4 years is on the order of 55%, blending both the hardware component and the SaaS component. But the other interesting thing that happens over that time period, specifically in the third quarter of 2023, is that we become a majority subscription revenue company. And that trend of SaaS being a bigger and bigger percentage of total revenue simply continues for as long as we can see into the future.
Now, with all this being said, what do you think, or what do you see as being the biggest obstacle or potential risk?
Well, if you look at the investor deck, there's like an ungodly number of pages of risks. And I think that's true for everybody. I don't see a lot of risk, candidly. And the reason I say that is that we've been doing this for 20 years. We understand the market very well. We've got great product market fit. We understand the growth vectors. We've been applying growth in the sales arena by adding more people, recruiting more channel partners, wash, rinse, repeat. We've been doing the same thing in the product vein with adding more physical products so that people can get more native Brivo equipment in their solution. We've been doing the same thing in the subscription realm, where we've gone from literally one line item that people could subscribe to when we launched to over 24 line items that they can buy from us now, and that's driven up the average revenue per account. So everything that we're doing with the new capital that's coming into the company is stuff that we've already done and already practiced and already rehearsed. And so from that point of view, other than the completely exogenous factors like war in Ukraine, inflation, recession, the really big things that you can't control, I don't see a lot of risks from inside the model that we've been practicing for years.
And you've touched along the way, but how has the past 2 years really defined customers' needs, or redefined customer needs, I should say?
Two big things. One, everybody who didn't have remote control of their building and remote control of the occupiers of that building said to themselves, I really need to get this in hand, and I need to be able to manage these things remotely. So there's that aspect of it. The second thing was that with the changing usage of buildings, people said, I need to understand how my employees are using the building or my tenants are using the building. And so that led to a big appetite for data consumption to get insights into how those buildings or those properties were working for them, what their employees were doing so that they could accommodate the new normal. And that's been really the big change. And of course, as we were discussing earlier, cloud technology fits the bill perfectly for satisfying those demands. Mobile, of course, is as prevalent here as it is in any other enterprise application market. So those are the things that people added to their ability to understand their property that perhaps they had not prioritized before.
Now, you've recently discussed how you found, or you were going through your data sets, and you found that your user accounts were very representative of US business activity. Could you dive into more about what you gained from this, what your findings were, and how this has influenced your strategy?
Yeah, sure. This is a little bit of a somewhat nerdy exercise, but if you bear with me, I think there's a payoff. So one of the things that we started doing very early on, we wanted to understand who our customers were, meaning what industry they were in, so that we could understand where people were buying the product, where people weren't buying the product. And so every customer that comes into Brivo, we get their industrial codes down to 6 digits. And so we know everybody from pharmacies to mushroom farmers to alfalfa farms to factories, whatever it is, we know exactly what kind of business they are. So we're able to form a distribution of all of our customers, saying we've got this many in this category, this many in that category, and so forth. The Department of Labor does that on a national scale for the United States. And so what we were able to do was compare our distribution of customers to the national norm of distribution for customers. And when we did that and calculated the correlation coefficient between those two, we're about 90% correlated with the distribution of the economy as a whole. What that means is that we go back to a comment I made earlier, very, very broad product market fit, meaning that we work in nearly every type of business there is and every type of property there is. From a investor standpoint, it also means that we're not over correlated or overweight in one sector versus another, and therefore subject to fluctuations in one sector. We are very broadly correlated with the entire economy, which is usually a good thing, but at least there isn't sector risk that there would be if we were only serving retail, for example, and retail was having a hard couple of years. And so I think those are the two of the most significant things about the customer distribution, the degree of fit we have, and the customer base that we have today.
And have you done any further studies that you've been able to gain insight from?
So we did a study recently along with ASIS, which is the largest professional organization for security people, and this is usually people that are on the customer side, not the channel side. And one of the things that we found there was that return to work is the single most pressing topic for anybody that's in the security layer, and by implication, anybody that's in the facilities management layer of these larger organizations. And so the outcome of looking at that was that people were more interested now than they have been at any other time in exactly the things I mentioned before: remote visibility into their people and their properties, remote control over their people and their properties, identity integrations with other software stacks, because nobody wants to manage identity more than once. And those were the kinds of things that we found in this very recent survey we did earlier this year.
Now, I'd like to take a step back from that. And we've been talking throughout this conversation about how you've been self-financed up until now, and now this creates an opportunity really for a capital infusion and what the implications are for that. It seems like a good use of a good chunk of the proceeds are being used to expand the sales force.
Yeah, yes. So there's really two big categories for use of funds here. One is sales, one is product. About 2/3 of the planned use of funds goes to sales expansion, and that's happening in a couple of different places. So one is just growing our field sales organization in the US, in Europe, in Latin America. And when we say field sales, these are the people that work with our channel partners. They recruit them, they support them in making bids to customers, they answer questions. They're really there as a resource for the channel, in addition to doing their own prospecting for end users. So we grow that organization, as we have been, adding more people in more metro areas, subdividing geographies when they get too big, and continuing to execute on that. For the last several years, though, we've also been developing 3 other sales teams. One is enterprise direct sales, meaning going out and doing business development with these large companies that I mentioned earlier. We still do fulfillment through our channel partners, because there's lots of other pieces, components, and installation labor that's involved in any one of these. So we're still doing the fulfillment that way, even though we're doing the business development directly. The second one that looks just like that is commercial real estate. So going directly to the large owners of commercial properties, finding out what their needs are for the entire portfolio. That's very much a direct exercise between our commercial real estate sales team and those end users. And then the same thing is true for multifamily. Again, it's a kind of relationship that needs to be direct between the technology supplier. So in all of those, field sales, enterprise sales, commercial real estate, and multifamily, we're adding to the number of people, and we're adding to the distribution of those people across the different geographies that I've mentioned before. If you take a look at the other third of the planned use of funds, that's growing technology. And the single largest category there is to continue this trend that we've been practicing for a long time of adding more and more SaaS services that people can subscribe to. So for example, in this past year and a half, we've added something called Data Explorer. I think the name tells you mostly everything you need to know. It's an analytics tool that you can get either a la carte or in one of our enterprise layer services. We added something called Snapshot, which is a fusion of video and access control information that goes through a machine learning algorithm to extract visual information that's of interest for people running an access control system. And then kind of saved the best for last year, we also launched this past year an anomaly detection algorithm that's based on neural networks. It works by training on the patterns that it can observe inside of your facilities with all of your people coming and going. Once the neural network for your people and your properties is trained, it can then tell you going forward when something abnormal is happening. So it's really that needle in the haystack capability that uses the data services that we've developed, but now adds an actual use case, if you will, on top of those things to meet your needs.
So what does something like anomaly detection mean in terms of an opportunity for your business?
So we've heard in every single business, this is really a characteristic of the information age, that there's too much information, too much data, and we are not keeping pace with our ability to understand that data. And so this is another of the many tools that are out there in many industries that are saying, hey, this is a way of actually making something valuable out of all of the data that you've invested in collecting already and telling you what's in that data. So that's what anomaly detection does. The value there on a differential basis is that there are lots of other similar kinds of systems, older systems that are doing access control and on-premise servers and things like that, where they can't give customers these additional insights. And so I think at the end of the day, people want insights from any of these services more or as much as they want the physical control. But the big trend has been to saying that a lot of the physical control issues are table stakes. That's the expectation for any one of these systems. The differentiator is in the information that comes out and what the business can do with that information.
So to circle back to the Salesforce component of this, could you give me some information on what the numbers actually look like? How big is the Salesforce right now? What are you looking to expand that to? And then I guess to add even more context to that, adding a layer of the competitive landscape, what does the closest competitor look like for their numbers?
So I don't know the competitor numbers. Not all of them publish, or not many of them publish that information about the composition of their sales force. If you take kind of a bird's eye view of Brivo, we're a bit over 300 people right now, 310, 315, something like that. About a third of the company is in sales in one way or another. If you're counting field sales, I mean, people who are out there, quota-bearing salespeople, it's in the 60 to 70 range right now. And so that gives you a feel for how much of that is actual, let's say, customer interaction-based versus support-based behind the scenes. But, a third to 40% of the company is sales-based right now.
I do want to press on the competitive aspect of this. So let me look at it from a different perspective. Let's say 4 to 5 years ago, you've got a customer that's looking in the space and they want to get a product for access control. Why would they go to your competitor over you?
So 45 years ago, the question really was, do I want a cloud-based system or do I want a server-based system? And that really plays off against a lot of the historical trends and attitudes that we were talking about before. The other factor that enters in is, do I have an installed base already? And am I going to make a decision to extend the solution that I have in place already? Or am I ready to make a technology refresh decision and actually move on to something different? So again, if you go back 5 years, that was the predominant gate between going with Brivo, which is and has been the preeminent cloud provider, versus one of the 40 or 50 other traditional PC or server-based solutions that's in the market. So that really has nothing to do with a lot of the usual product shootout types of things like features and how's your tech support and all of those things that really matter. It has to do with a very fundamental level of comfort with cloud. If you're asking that same question today, now there are other cloud providers in the market. Most people have seen the handwriting on the wall. And so now the differentiators are based on who's got the most complete feature set, who works with perhaps other systems or is integrated with other systems that I'm interested in or already own. So for example, being able to work with my video management system is one of the big things that we encounter in access control. And then there's, the particulars of do they have the specific feature that I need for my vertical market? And there's a little bit of variation by vertical market in terms of what features people are looking for. There's more variation in terms of large company versus small company, though.
So is there anything that you could pinpoint that anybody's doing better than you?
No, can't think of anything.
All right, so there's no reason for them to even exist.
No, not a single reason.
So what do you see as the biggest obstacle where there is so many players in the space? What's the biggest obstacle for new entrants?
I would say capital. What we've seen in this space, again, kind of before 5 years ago, is a lot of companies coming in and only being capitalized, 5, 10, 20, $30 million. And that's really not enough to do what you'd want to do now. So again, that's another part of the equation that's changed. There are more companies that are getting better capital, the 100 million level of aggregate investment kind of thing. And that's a change. And so that's made the industry much more dynamic in the last 5 years. You're also seeing a lot more specialization. So for example, if I look back 5 or 10 years, there was very little different going on in multifamily in apartment buildings. And the reason was that while there were a lot of smart home solutions out there in the market for single family residential, people hadn't stitched together the additional software layers that you need to have in a multifamily setting, because not only is the apartment dweller able to interact with the smart thermostat, the smart lighting, the sensors, and all that sort of thing, but so is the management company. And so delineating those different levels of control, who's got permissions to what, how much information can management see about your comings and going, which is a very relevant thing. So for example, in New York, they have laws about maintaining the privacy of your comings and goings. Your landlord's not allowed to see that sort of thing. So there were a lot of things that needed to be worked out and have since been worked out, such that there's a lot more activity in multifamily today than there was 5 or 10 years ago. That's probably the clearest example of a market that was, flat for a while, but is very, very active right now.
So in a way, I suppose you've answered this, but I'll ask it anyways. Is there any aspect that looks attractive for a potential acquisition for you?
Yeah, there's a lot going on. What's happened is that there are many higher layer services, and I'll get to what that means in just a second. There are many higher layer services that are being combined with a base layer of access control or building management. And so we started seeing this quite a while ago, where companies from different vertical markets would integrate with our platform so that they could deliver an access control feature to customers who might, for example, be in the gym or health club business. We've got a lot of partners that are SaaS companies. They provide health club management services, all of the enrollment, the billing, the reminding you of yoga class, all that kind of stuff. And they need to let people into their facilities in order to do that. They don't want that to be something that's separately managed. They want that to be something that's built in. So they integrate with us, off they go. You're seeing this kind of thing now, not just for highly specialized applications like health clubs, you're seeing it for all tenant spaces generically. So property owners like Crown are now seeing that people want to have a digital experience of the building itself. And so there are tenant experience applications that are being built in there. There are workplace experience applications that are being built in there. And there's a lot of different services that they provide around amenity reservations, conference rooms, hoteling, CRM services, payment services, marketplace, all these kinds of things. But the one thing that they all have in common is that they all need to have access control. So having sold our millionth mobile application for people to get basic mobile credential services going in and out, it's not a big leap of the imagination to think about, well, we've got 1 million people out there using this application already on their mobile phones. What can we layer on top of there by way of tenant experiences or resident experiences or workplace experiences that build on the value that they've already invested in with Brivo and give them more things without having to shop with another vendor or go off and look at yet another technology stack that they've got to integrate back into Brivo and who knows what else. So generally, I would say that the kinds of things that we're interested in are things that add value to the mobile experience of the customer base that we have today.
That does make a lot of sense. This does circle back to a previous question, but within each segment, whether it's commercial real estate or enterprise or looking at multifamily, what do you represent for market share?
That's a really hard question to ask, and I'm not dodging it. The data, the market research data on this is very thin, particularly for cloud-based services. What we seem to be able to deduce, and I think this is in one of our filings, is that for North America, for the cloud-based SaaS service piece of this, this is a lot of qualifications, so bear with me. As of 2019, which was the last year that all this data was in one place at the same time, we were about 40% of market share. So, and the rest was fragmented. We were the single largest chunk of that. Again, data's thin, it's changing quickly. There's no comparable data set for Europe. There's no comparable data set for Latin America. But when we look at some of the business statistics that we've published in our investor publication, 72,000 locations, over 20 million users, over 300 million square feet of space under management, 41 countries. There isn't a company in the world, and this is something I look at every day. There isn't a company in the world that has posted numbers even half as big as the numbers that we've got. And so I'm pretty comfortable saying that we're very much in the lead. Exact percentage is a little bit harder, not because we haven't tried, but because the research analysts haven't been able to collect that information.
Okay, that's understandable. Ricky, I do want to jump back over to you. We did start this off. You added some pretty good information from the top here, but I guess I have yet to meet a single sponsor that has said that putting together a transaction is at all easy. So with that said, I can't imagine that you're putting all this time, capital into something that you don't truly believe in. So for the sake of viewers, why should they care? What should they understand that you see in Brivo that they should?
Yeah, that's a great question, Daniel. Thank you. So, my passion truly is why I'm seeing this Brivo transaction exciting for us is because, as you heard Steve over the last 20, 30 minutes, to sum it up, he really has created an operating system for the built environment. And with the proliferation of IoT devices and user experience apps and all these bolt-ons that could happen well outside of what you may coin as safety and security, as all these bolt-on, Brivo will be the center of it all. And why I'm so excited is because we have the opportunity here to invest in essentially the ecosystem leader here that all of these companies really want to be part of. And just as a building owner of just a couple of million square feet that I own and manage, plus the first degree and second degree separations with hundreds and hundreds of millions of square feet of additional building owners that I will eventually bring Brivo to, they will benefit from this greatly in efficiencies, in obviously security, but also being able to enhance the experiences for the occupiers of all these buildings. And to have this unique opportunity very early on in the life cycle of where this is going to go. It's like saying, investing in Windows in 3.0 or DOS or some of the early OSs of Apple, and then seeing all these added services to be built on top of it. So it's a very, very exciting time and place to be in right now. And we think Brivo is definitely the best poised to take advantage of it.
Sure. So taking the flip side to this, Steve, I can't imagine that Crown was the only one asking you to the prom here. What is it that stuck out to you about them?
I would say the experience. So first of all, you're right. They weren't the only ones. But the depth of experience in real estate that Ricky was just talking about. So being an owner, being an operator, the specificity of the Crown PropTech fund itself. There are a lot of general purpose funds out there that don't have the same level of commitment to PropTech, the same vision for the role of technology in real estate. And that's something that we were very specifically looking at versus, again, more general technology investors or just some of the more opportunistic SPACs that are out there. And so we didn't want to be with somebody that didn't understand what we were about, that didn't understand what our customers were about. So this group, more than any other, stood out in that respect.
So we've covered a lot of ground, including what it is that you're offering, how you've adopted or adapted within the environment, especially over the past 2 critical years here, and then how you plan on executing going forward. So with that, I really do appreciate you guys taking the time to speak with me today.
Our pleasure. Thank you very much.
Appreciate it.